Video right now all over the world. You're alive and blessed. Can't really complain. Welcome to Misunderstood, an MYB trading course. In today's trading session, we're going to talk about 4 trading chart pattern that every trader must familiarize themselves with. First, we're going to talk about the bearish double top, how to identify a bearish double top, and how do we trade a bearish double top. Secondly, we're going to talk about a bearish head and shoulder. How do we identify a bearish head and shoulder, and how do we trade a bearish head and shoulder? Thirdly, we're going to talk about a bullish double bottom. What is a bullish double bottom? How do we identify a bullish double bottom, and how do we trade a bullish double bottom? And finally, we're going to talk about a bullish invert head and shoulder. What is a bullish invert head and shoulder? How do we identify a bullish invert head and shoulder? And how do we trade a bullish invert head and shoulder? With that being said, let's jump right into it with the first one. The first one today we're going to talk about is the bearish double top. A bearish reverse pattern that forms after an uptrend, consists of 2 peaks and roughly at the same level, indicate a potential trend reverse from a bullish to a bearish. How do we identify a bearish double top? We look for a strong uptrend before a formation. Ensure 2 peaks form at similar level. Confirm the pattern once the price breaks the neckline. So how do we draw a bearish double top? So we come to our toolbar, guys. We come right here. So we're looking for price to go up to make a higher high, come back down, reverse back up, and then continue heading back down before coming back up and then continue back on the downtrend. That is how we identify a bearish double top. And how do we want to trade it? What you guys could do also, you guys could come and get you guys short position, and you will put the short on the bottom here. You want to right above the last higher high, and you can just ride the wave all the way down. That is how we identify and we trade a bearish double top. Moving on to the bearish head and shoulder now. So the bearish head and shoulder is pretty much quite simple. So let's remove this for a second. So the bearish head and shoulder now. A bearish head and shoulder reverse pattern that appear at the top of an uptrend consists of 3 peaks, a higher central peak, head, and a 2 lower peak, which we call the shoulder. The pattern confirmed once the price break the neckline. So how do we draw that? So we come back here into our chart. It will be the same as always. So we go for a higher high. Price will break up to a higher high, creating the shoulder. We're going to come back down. We're going to go back up to create our new higher high, which will be the head. Then we're going to reverse back down, a higher low. Then we're going to go back to the shoulders, and then we're going to come back down all the way down into the downtrend. That is how we trade the bearish head and shoulders. So how do we want to trade it now? So let me put my chart up here properly. We can just leave that. So you guys will come right here, get your shorts, and you want to short it above the last higher high. So you're going to put your stop loss above the high right here, and your stop loss above the previous high, which would be right here. And you want to ride the wave all the way down. So after we already understand how the trend work on the chart pattern on a bearish flow, now we're going to see how it work on a bullish flow. So now we want to remove this. So moving to the thirdly, now we'll talk about a bullish double bottom. How do we identify and what is a bullish double pattern? Look for a strong downtrend before the formation. Consists of 2 roughly at the same level, separated at the peak. Confirm occur when price blocks the neckline. How do we identify a bullish double bottom? First, we look for a strong downtrend before the formation. Ensure 2 thoughts from a similar level confirm the pattern as the price break neckline. So how do we do that? So instead of going up, so in the previous bearish head and shoulder, we went up, created a higher high, come back down to higher low, higher lows, and then we continue back down. So now on the opposite side now, vice versa, for the bullish double bottom now, we're gonna come here now, we're gonna grab our same rectangle now. Usually I wouldn't recommend you guys just trading of chart pattern. I would always implement these as a trade, mix these with some supply and demand, some price action. I'm going to walk you guys through price action in different videos, supply and demand, order blocks, liquidity, market structure. Don't just trade chart pattern. Mix this, implement this, but it's good to have the knowledge of it. So with that being said, the bullish double pattern, we're going to come down for a lower low, go up for a lower high, reverse back down to get the liquidity, and then we're going to shoot back up. That is how you pretty much identify and you draw your bullish double top. So how do you want to trade this? You want to come to your overall long instead of the short. Now we're going to grab the long, and you want to put the long right above the last higher high, and you're going to put your exit against the last low. So you're going to enter right there, and your stop loss will be below, and you want to ride the wave up, just like that pretty much. So moving forward into our final one, we're going to talk about the bullish invert head and shoulder. A bullish reverse patterns appear at the bottom of the downtrend, consists of three troughs, a deeper central taut head, and a two shallow shoulders. The pattern confirms once price breaks the neckline. How do we identify a bullish invert head and shoulder, guys? First, we want to look for a downtrend leading to a formation. Identify three trough with a middle line through being the lowest. Confirm the pattern with a neckline breakout. Volume should increase at the breakout. So how do we draw that? We want to remove this now. So we're gonna come right back here, guys. So we're gonna go price on the lower low, create the lower low for you guys. It's gonna come back out, continue coming down, then price is gonna go back up to mimic the last higher high, then it's gonna come back down, but not too low to break past this right here. If price break past the lower low, that means market shift. The whole market is shift from a uptrend back to a downtrend. So once it mimicated back and come down low enough, a lower low, a lower high, and then it mimicate back up, and then it will come back down, and then it will continue going until price eventually break past there, and then it will be into a downtrend. So how do you want to trade it? We want to come right here, and you want to put your long. You can get an entry here if you want. You can put you guys entry. So we come right here, guys, and we're gonna put our simple as this. We're gonna put our stop loss, enter right there, and a stop loss above our last higher high, our last lower low, sorry about that. And then we come back down, and we can just ride the wave up. Or if you want, you guys can wait for the mark or extra confirmation. You want to wait the price to come back down, right, like how it did here, and then it can mimic it, and then you can put your stop loss there. So with that being said, now we're gonna go on a chart and look for some patterns. So let's see something. We're gonna look for a bearish one first. We're gonna look for a bearish one. So on the chart here, guys, as you guys can see here on this one, I have right here, it's a bearish. I have a bearish double top for you guys. As you can see, price went up, a higher high, came back down, mimicated at the same resistance level, and then it continued coming back down in the down direction. As you guys can see, I have my stop loss right here, right above the last higher high. My stop loss above the last higher high, and I just ride the wave right down. That is how you identify a bearish double top. Moving forward to the bearish head and shoulder, we want to go to our next chart. As you guys can see right here, there we go. Bring it up for you guys closer. There we go. So this right here is a bearish head and shoulder. See, price went up to create a higher high. It came back down, and price created a new higher high. Then it came back down, lower, and almost created a higher high, but it didn't. So you want to put your stop loss above the last higher high, and you could eventually just ride the wave down. Simple as always. Eventually, if I wanted to, you could have put this right here. Eventually price will come there, because in the previous video I teach you guys about order block. This is right here is a perfect example of an order block. The small candlestick right here and this huge engulfing candlestick. The candlestick prior to that represent the order block. So with that being said, now that we identify how to trade on a bearish market, now we're going to move to how to trade on a bullish market. So we're going to come on next chart. Right here, guys, just like this right here. So the bullish double bottom, price came down to make a lower low. It went back up, tried to form a new higher high, but it failed to, and so it came back down to mimic it. But see how it didn't break this previous lower low? If price break this previous lower low, price will be shift to a downtrend. But it didn't break the previous low, so you entered right above. This right here, guys, is what you call a sniper entrance, guys. This right here is always the sniper entrance. Wait till price to always create a last lower lows, go back up, and then it mimic it. That's when you will enter the trade and put your stop loss above the last lower low. In this scenario right here, this where a lot of institutional traders and retailers, we will put our stop loss. So liquidity will come and it will kick us out this trade right above here before going in direction. So what you guys want to do low key is give your trade some breathing room, because you just never know. You just never know, guys, right? So after we identify that, lastly, we're going to talk about the bullish inversal head and shoulders. So we're going to look for that right now on Meta. It's easy as this, guy. I don't know how else to show you guys, but it's really easy. You guys just got to lock in. But I'm here to teach you guys, walk you through the step by step. Walk you through the step-by-step procedure, guys. How is it done? Like I said, I normally don't recommend trading chart pattern alone. I would mimic this and trade this with some other trading style. Just don't trade. If you want to, you could. Whatever makes you money, to be honest with you, go for it. Whatever produces the cash flow, I recommend it all. I'm all for it. I'm all for it. But the more knowledge you have about it, the better it is for you in the long run. So with that being said, here, the bullish inverted head and shoulders, right? Price came down to make a lower low. It went back up, tried to form a higher high, but it failed to. So price pushed it right back down to create our lower lows before eventually going back up to break the last previous high. So once it break this price shifter, so we can mark this off right here, and we call this a market shift, right? So price shift from a downtrend. By seeing this right here, price shift from a downtrend to now price into an uptrend. So we wait for price to come back down. So price create a new lower lows, break past it to create. So this was a bearish market structure for a second. Then price shift up here, push it all the way down, grab some liquidity here, came back down, shift the market from a bearish market to now a bull market. So we wait the price that came back down. And 30 seconds ago, I told you guys, once price never break past the last previous low, price is still going in direction. So you want to put your stop loss right below your last lower low. So this right here, you put it there. But remember now, this right here is the perfect liquidity sweep right here. Anything on the bottom here, it will be liquidity. So price would have normally would have come right here, sweep all of this liquidity on the bottom here, then happen to go back up. But it didn't. It just from here, it reversed and it went back up. But see, it did eventually came back down here, and look at that. Right there, liquidity right there. That's how millions, a lot of traders got kicked out of the market. Right there, before price eventually went back up. And just like that, guys. So that's a quick recap. We talk about the bearish double bottom. a bearish head and shoulder, a bullish double bottom, and a bullish invert head and shoulders. So with that being said, guys, I hope this video find you guys very knowledgeable and impactful. And as always, stay blessed and mind your business.